Good afternoon and welcome to an Innovation Forum webinar on circular finance, sponsored by Accenture Strategy. This webinar is intended to provide our audience with an understanding of what the circular economy is, why businesses are looking at the concept, and then explore what sort of a role the financial services industry has in bringing it about. For our panel this afternoon, we have Richard Kooloos, Head of Sustainable Banking at ABN AMRO, Gert-Jan Sikking, Senior Analyst of Responsible Investment at the Dutch Asset Manager PGGM, and last but not least, Gerald Naber, Vice President of Sustainable Lending at ING Bank. Welcome to all, and thanks for being with us this afternoon. To explain the format of the webinar before we kick off, there are no slides. This is not a presentation. It's a structured panel discussion with a question and answer session at the end. As an audience member, you can get involved by posting questions that come through to me, the moderator, which I will put to our panel in the last 10 to 15 minutes of the webinar. You will also receive a recording of this webinar via email, which I urge you to share with any colleagues that may be interested. This webinar forms part of the build-up to the Circular Advantage Business Forum that Innovation Forum are hosting in London on June the 8th and 9th. The focus of that conference is on how different businesses can successfully commercialize circular business models to reduce risk and costs and increase revenue and profit. Delegate passes are still available, so please see the information on the website, the URL to which is on your screens now. So just to begin with, let's start with a discussion about what the circular economy is, to build the sort of foundation for further discussion. Gerald, if I start with you, what is the circular economy?
Okay, Boris, thank you very much for the opportunity to talk today. When we talk about the circular economy, I'd like to stress two elements of the word itself. First of all, circular, which is basically smart ways to reuse and recycle all the resources and the materials and nutrients that are currently employed in our economies. Whereas the linear approach of making stuff, which is now the prevailing mode to produce, where you take resources, you make a product, you use it, and then very often it becomes either you incinerate it or you bury it in a landfill. Whereas in a circular economy, you would take a material or resource, you make a product, you use it, and then during or after its lifetime, you would reuse it, you remanufacture it, or you recycle it. So then in the next cycle, when we produce another product, then we either reuse that same material or the same product, and as a consequence, we use less material, less virgin material, and because stuff is already in the cycle, and there's no or less waste produced. So that's on the circular concept, and then the economy reflects a lot the system that is needed to enable such circularity of our resources. It's a system in which companies and institutions collaborate and work together to make such a cycle possible. For instance, if you think about your supplier, if you work with your supplier and together to develop the design for your product, then the supplier can supply you with the modules or with the right elements to produce it. Your waste company, if he or she knows the ingredients in your products, then he can, to a better extent, retrieve the value from the waste stream that you have. And of course also your customers, if they use your product and maybe they don't buy it, but they use it as a service, then they can also return it to you or work together to get again the best value and the best products from the product itself. And obviously, of course, don't leave that out. The financial institutions, of course, that we are here, also can have a role to play here. And
a bit later, but can I just ask you in terms of why it's you spoke about the linear sort of business model. So what exactly is that, and why is circular economy necessary? Why is a linear model of mass production unsustainable?
The response to the linear mode of working, well, the problem that you see arising from there is that there's, of course, debate on the depletion of resources, the price fluctuation of available resources, but also the growing production of waste, the emissions related to producing raw materials. And I think the response to that is the circular way of doing business, that you indeed manage those risks that are aligned in your supply chain, so you become less dependent on virgin materials. You can find resources already currently employed in the economy. It's about improving your business as well. So it's about cost cutting, efficiency. If you are able to retrieve the value from the products that you have sold already, then you can probably cut your costs and improve your gross margin. And lastly, it's also about growing your business. The relationship that you build with your customer, instead of selling it and then you basically say goodbye to your customer, and perhaps you will come again across him in a couple of years' time when he needs another product. Your customer intimacy grows if you engage into a long-term contract, and that collaboration will basically enable you to propose better propositions to your customers as well. So I think those three elements are all that together is a reaction to what you could call the linear economy.
And also, just to put it out to Richard and Gert-Jan, with regard to a lot of people, when they first hear of the term circular economy and hear a little bit about what it means, it sounds a bit like recycling, but it's not. How is it distinct from what typically how society has been dealing with waste up to this point, which is through recycling? How is it distinct from that?
Well, to look at it from a really abstract level, we're basically decoupling economic growth from a growth in using virgin materials. So for the last, let's say, 150 years, economic growth has gone hand in hand with the growth of material use. And given that not only material prices go up, but also the volatility of material prices increases, it's just common sense, or it's in a way a smarter way of doing business by using the materials which are close by, and maybe not. You don't have to mine them in countries far away, but also with unstable political climates. And it will become over time a cheaper way of finding the materials you need to produce your goods. And what Gerald already indicated, instead of selling something once, you actually are in a relationship with your client if you provide him a service instead of a product. So it allows you also to to provide other services on top of the service you first sold to your client. So it's just a way of also improving your business.
And Richard, just to bring you in here, so what, in terms of the advantages that are usually associated with, the argument for having a circular business model, what kind of features, benefits, advantages does a circular model have relative to its linear counterpart?
Well, I guess the most important thing is you make your business more robust by designing your products in a more circular way, so that you can actually reuse parts or the virgin materials that you've used to make the first series. You get more in control of your supply chain. Instead of buying stuff, let's say, on the spot market, you enter into more long-term relationship with your partners, which co-develop your products with you. So you get a more robust supply chain on the one hand, and you get also a closer relationship to your clients on the other end. And those are two things that in a linear model are much more difficult to reach. So I guess you just get a more stable business.
Yeah, and just to stick with you for the time being, and just explore some of the work that you have been doing, sort of with the circular economy and circular businesses. ABN AMRO have been doing work in the construction and real estate sector. Would you be able just to sort of give us an outline of some of the companies you've been working with in the space?
Yeah. Well, basically, we've done two things when we started. First, we wanted to increase our knowledge on the subject. So what is circular economy, and where is it material? In which businesses is it really making a difference, or can it make a difference? And second is like, getting our hands dirty and actually financing circular businesses. So on the knowledge part, we're working together with Circular Economy, and we made, for example, a circle scan of the construction sector, so that we understand where the material flows are and where the also the potential risks and opportunities of our clients can be. Because by doing that, you ensure that you focus on the material issues and not the maybe, interesting or nice to know stuff, but which are not material to the client's strategic agenda. And working with real estate companies and construction companies, basically what we found out that we worked particularly with commercial real estate, construction of new commercial real estate in a circular way. So let's say financing circular office buildings. And at the end of the day, what you realize is that you're not only looking at a different way of using materials and designing, etc., but it's the whole business model of erecting an office building changes in a positive way, in a way that you use all the ingenuity and all the knowledge and resources available in the complete value chain of your construction program. So not only the main contractor looks at the design and discuss things with the architect, but also the subcontractor and the subcontractor. And by getting their knowledge from the table, they look at several things. Not only how can, if the office building is being taken apart 20 years from now, how can I maximize the value of those material, but also how can I just improve the quality of the building, for example, also the inner climate, by making smart decisions, because most of the costs of an office building are defined in the designing phase, not so much the construction phase, where all the losses that are created in the construction, in the building, are in the construction phase. There's like 20% waste losses in construction, and that if you can help parties to reduce that percentage and actually give it back into a profit to your supply chain, then everybody's happy. And at the end of the day, we finance a building which is of a much higher quality than a regular building, which translates into better lessees, which are willing to pay a higher rent. And if at any moment in time there will not be lessees for this building, we can very easily have it reused as, let's say, from an office building to a hotel or to apartments, or even pick up the building and put it in a different location. Or if all that doesn't happen, take it apart and sell the materials at a high residual value. So as a financier, the business case is just much more robust.
I see. And Gerald, ING recently invested in a company that's a circular company. I hope I'm pronouncing this correctly, but the Van Champenziel Group. Please do correct me if I pronounce that incorrectly. But could you tell us a little bit more of the company, and then also sort of ING's involvement with it?
Sure. Yeah. Funny. The name, how we would pronounce it in Dutch, would be the Van Scherpenzeel Group. But I dare you indeed to don't repeat that. Indeed, Van Scherpenzeel Group, it's a recycling and resources company, a Dutch company with operations in the Netherlands, Belgium, and Germany. And typically where, a waste company normally would be basically providing a solution to a problem, in the sense of taking away the waste of a company and then just burying it or burning it or stuff. This is it's now really trying to be a linking pin in the circular economy by working with their clients, investing in assets and in technology and knowledge to retrieve the utmost value and materials from the waste streams that they manage. So basically, from the philosophy, waste is food or waste is a resource. That's what they try to do there as well. So they, in that sense, play a pivotal role in the circular economy. ING has taken an equity stake, 20% in the company, because we believe, it's likewise as the management does, that there's a key role for them to play in the growing of the circular economy, and there's a lot of potential, and we're happy to support them in the future in their growing business and their expanding their business as well.
And was it a conscious decision because they were sort of a circular company, as it were, to invest in them because of that, or I mean, what were the factors that led to it being an attractive investment opportunity?
Well, Gert, you know, the outcome, if you can call this companies circular, is basically the outcome of understanding what their business is doing, and their business is what I just said to try to explain, is retrieve valuable resources from which is to be deemed normally useless, as in other words, waste streams, and then if you understand the business and you understand that there's a large potential and there's a growing need to do this, what they sometimes call urban mining, and managing those streams and getting all the resources back into the circles, then in the end you're looking at something which is circular. But of course, the reason why we engaged is because we saw this is a good business and there's a lot of potential.
I see. So it's a business opportunity as opposed to just circularity as investing in the novelty in itself. And Gert-Jan, if I may, because you are our main sort of the asset manager on this panel, I'll sort of try to address most of the equity questions in your direction.
Yep.
Have you, in terms of PGGM, does it have a conscious or sort of direct policy of wanting to invest in circular companies at the moment?
Well, we see the development of the circular economy more as an example, as already indicated by Gerald and Richard, as a way to create long-term sustainable business models and with more stable cash flows. And as we are a long-term investor, we think in the end it's good for our long-term investors, long-term investment portfolios. So in that respect, it's definitely an interesting development. But I also have to admit that so far we haven't made any specific investment in a company because it is circular, and because that would be the only reason. But we take it into account when we analyze our investments, and where sustainability is an important issue for us as a long-term investor.
And so, what have you been doing with regard to circular economy?
Well, what we did is, I think the same with what Richard of ABN AMRO already mentioned. We also want to learn from it, and so we at the moment we spend time also with the circular economy as another, and we also now work with other Dutch banks to learn from each other. We did several sessions where we also share experiences. The steps that we want to make is what we call as understand, execute, and disseminate. We first want to understand the implications of the circular economy on the business and financing models of company. As being a long-term investor, we still also want to get a better knowledge about what are the financing requirements, to what extent can we as an investor facilitate these developments that will take place in the real economy. So in that respect, we see ourselves also as an enabler of this development. Second thing is also, as I would execute, we also want to work on is spend time and go through to the learning curve, and we do this with that we support several initiatives around circular economy also in the Netherlands, and recently we've also been working on developing a so-called circle assessment tool, where we analyze a company and we analyze their processes and design principles, and we also get a better understanding about the circular opportunities of a company and to what extent the company is already using these opportunities. And then the third thing is disseminators, that we also want to not keep this information for ourselves, but also share it with other people, and especially with also people in the financing industry, because as our role as enablers of this development. And so in that respect, I think we have a very open culture here in the Netherlands, where we also try to learn from each other and share case examples.
And yeah, that's the sense that we've got so far from this discussion, in the sense that this is really, circular economy in itself is a relatively new concept as an independent term, but then the role of finance within that is even more fresh and less well understood than that. So some of the stuff that I think we'll end up talking about here, it will be almost conceptual in terms of looking into the future and trying to visualize exactly what the role of finance will be. But let's just sort of address some of the questions that it does bring up. So what challenges does, from your point as a sort of as an investor, what challenges does having a circular model do to the company's financing needs? How is running a circular business model change its financing needs?
Well, I think from the financing side, you have I think you have different cash flow streams. And so instead of selling your products, you will in fact lease them. So I think in the beginning your revenues will be lower, but more stable over time. And this is one of the topics that we also discussing with other financial institutions and the banks in the Netherlands to see to have case studies and share examples what specifically the financing needs for these companies are, and to what extent can banks fill a certain part of this financing need, and to what extent is it an interesting investment for longer term investors like ourselves.
And Richard, so you spoke a bit about the construction sort of exposure that ABN AMRO has had with regard to a circular company, but what was the selfish, sort of almost selfish commercial case for the company to engage with a circular business? In the sense that, was it just that it was less of a lending risk, they were less likely to default? What were the sort of opportunities there?
Yeah, well, I mean, to start with, in the economic cycle where there's an overcapacity in the market, especially for office buildings in the Netherlands, to have an entrepreneur at your door saying, I'm looking at things differently, and I think that I can make money even though the circumstances are difficult, and the fact that he's proving that he can do this is, of course, already interesting in itself. So in a difficult market, you're dealing with an entrepreneur with a good commercial sense of what the market is asking for and how to make money in such a difficult market. I mean, at the end of the day, this office building, the series of office buildings we've been financing with this client, Delta Development, the rent that its lessees are paying for these office buildings are like 2 to 3 times as high as the office buildings, across the street. So he is managing to create additional value added to his clients in a very difficult market. So the fact that he can attract these top clients is of course, from a financing perspective, fantastic. So he is creating additional value in, more or less a commoditized business like commercial real estate. So, first and foremost, we're doing business with a really good entrepreneur. Secondly, he's finding the right parties to rent his building. So with very solid companies, occupying his building. So there the risks are also below average. And thirdly, if everything goes wrong, and if you could say the first 2 things, the probability of default of this client is lower than average. But if things would go wrong, our loss in a default situation would also be lower because it is first of all, it's a very high-grade office building, but even if nobody wants an office building in that location, you can turn it easily into a hotel apartment, or you could, like I said, even pick up the building and reconstruct it somewhere else at a very low cost. So our loss given default is also lower than in normal real estate business cases. So it's actually, for us, it's just a very good business case.
I see. And so even if you end up holding the asset, you'll still be able to extract much more value from it than you would had if you invested in sort of a normal sort of building.
Yeah.
So yeah,
because
risk, yeah.
There's actually even a positive residual value if if at that location you can't do anything with the building anymore. In a normal office building you would have to pay the demolition cost and it will be a negative value. But in this case, it's already, you can prove and you have arranged upfront that all the materials or most of the materials can actually be sold for other construction parties, and there is a positive residual value even in the materials themselves. So you would have a positive demolition value.
Okay, and let's just talk a little bit about the actual value of being a circular company in terms of what any kind of preferential treatment that it would offer you from financial companies. So one of the questions that we've had come in from the audience, and I'm afraid it's scrolled down a little bit, but I did jot it down, was do you know of any places where circular companies can actually pitch investors at the moment and receive preferential treatment? I think this would be a good question for Gert-Jan.
Well, to be honest, I'm not aware that there's a kind of pitching facility where they can come and pitch for them for the businesses and for financing. But on the other hand, if you look at our investments that we do, we look more and more that we want to invest certain parts of the portfolio to really, but intentionally with sustainable business models, and we will only invest in you if you have these sustainable business models, and we will not invest you if we think the risks are too high, also on the sustainability side. So in that respect, if you although we go through the learning curve, we see circular economy and assessments that we do also become a part of our analysis to invest in these type of companies. So just to be able to get the opportunity to be invested in, this will be, I think, over time will become more important.
I see, but from what you can see, sort of at PGGM, and then also, I would ask you about the broader sort of socially responsible investor community. There aren't any conscious policies to provide preferential treatment for, say, a circular company, as opposed to one that is concentrating on sustainability more broadly. It just, they don't have to structure it to a sort of a circular model as such right now.
No, it's not that. At the moment we don't. From our analysis so far, it's not that. If it's that we would only invest it if it's a very good sustainable company, that we will not invest in it, and if it's circular, that we will invest in it. But I think it is more. We see the circular development as a way of a more sustainable and stable business model, which is interesting for our investment portfolios. But at this point in time, it's not that we invest because it's a circular.
And if I can add perhaps to that, Boris, I think indeed, like what Gert-Jan is expressing, and also Richard, is that we're all, as mainstream investors or financiers, we're very much engaged with this topic and want to understand the implications and see, and we definitely recognize the potential. So if there's any pitching opportunity, I think we're all open to discuss and see how we can support this. but I do think that just giving any business model or company the label circular on itself doesn't say too much. I mean, it says it would tell you how it's conducting its perhaps operations or dealing with its resources, but you still have to understand how it is selling its products, or what kind of relationship does it have with its employees, what kind of, or with the clients, what working capital solution does it have. So there's a lot of stuff you still need to understand to be able to finance it. And even if, because I know of this particular investment fund, if you're talking about equity, it's called Circularity Capital. They have a very specific focus for circular companies, but even they, despite the fact that they have such a strong focus, they of course still need to understand first the business model and see if there is it's a sound business investment.
I see. And in terms of sort of the risk management processes that you have, I know you've mentioned right now it's still sort of being developed, but do you think the kind of risk management procedure in terms of the way that you vet opportunities will need to be changed to adapt to the sort of the circular model? And it's sort of, if you can offer any practical examples of how it would change it. I know, for instance, that, and it's been alluded to quite a few times now, that access over ownership, in the sense that you don't own things, you just pay for the utility of a particular product or service. I mean, what are the more practical implications for that you can see as a financier?
Well, maybe if I can respond to that, and we have ING has written a report, and it's in a moment of finalizing it now. It will be ready in 2 weeks' time, and we did have in that report looked at what kind of business models are prevailing in the circular economy, and what kind of implications do they have for the financing of it. Looking at, we just basically took the classical building blocks, if you want to call it that way, of financing or of bank financing of a company, where you look at the cash flows, risk profile, or the capital available, credit history, and the collateral. And then with that model you just said, if you the product as a service ownership, or you retain the ownership, you can see indeed that cash flows are spread over time, so that might have an impact on your working capital needs. Your balance sheet will grow if you maintain ownership. Your inventory will of course grow. So you expand your balance sheet. The collateral topic here is relevant as well. I mean, can you access the product you've sold to your client, or you rented to your client, or do we have to look at the contracts underlying those services? But also credit history. If you, instead of selling, you're going to engage into a lease or a renting contract, you will run a higher risk of non-payment with several clients. So what does it tell you about the risk? What does that for conclusions have for the risk profile of you as a customer? So all of those elements we looked into, and there's a lot of implications there to that we need to understand how they change if more companies in a certain supply chain are adopting a circular business model.
Okay, so almost a lack of precedent data with regard to trying to understand the implications, just because circularity is a relatively new movement, as we've already said. But can I just ask you, just sort of in terms of your own opinion, will it be that circular companies make finance get involved, or will finance help to make a circular economy? Which one will be more of? Because say, for example, like a lack of data, that means that finance will just stay out of it if it doesn't understand it, until it comes to the point when circular companies, of their own accord, have shown themselves to be more robust businesses. It's almost a philosophical question, but I don't know if Richard, if you'd like to take that one.
Yeah, well, what you see right now, it's either really small companies which are really fighting against existing business models, but on the other hand, you also see, existing larger companies transforming a part of their business in, instead of supplying goods, they're supplying more services, and things can go really quickly. I mean, if you were in the business of selling CDs or DVDs as a product, well, guess what? With Spotify and all its spin-offs, who has been buying a CD in the last, let's say, 18 months? So it's maybe not so much an example of circular economy, but it's definitely of something which can help you imagine what it could turn to, because you're turning a product, a CD, into a service, music. Same goes for, of course, for DVDs. If you had to go out to rent a DVD, and now you have Netflix. I don't think anyone with Netflix is buying DVDs anymore. So it's changing business models, and like Netflix, they started as a DVD rental company and they completely turned their business model around. But you see also many examples of parties which saying, I can add more value and therefore also increase my margin by, instead of selling my stuff, basically providing it as a service. And by the way, because I'm doing it, I will design my products in a different way, make them last longer, to maybe have the operational cost go down, or the maintenance cost, so you get a higher quality product. But it really depends on whether or not it's material for your type of business, or it can become material. And sometimes there are surprises, maybe like Spotify, which has taken quite a big share of the market, while a couple of years ago people thought that iTunes was the winning business model. But it's really, if you don't know if things are material for your business, then maybe it's still worthwhile to invest some time in being engaged in this process, and maybe sharing or participating in these knowledge centers like the Ellen MacArthur Foundation and Circular Economy, because you will be talking to people working with it, and together you can find out if it can be material for your business, and then you'll be at the front row of creating new business for yourself. So, and that's basically, as a bank, we're trying to do the same thing to determine for which sectors, for which of our clients it can be material, and also turning that back into our credit decisions. Which companies are at risk because they're not acting on this trend, and for which companies, for which sectors is at the moment less relevant. Because at the end of the day, we want to be for financing the winners of the future, not the losers. So it's really for us right now something which is on the strategic agenda of our clients, or it should be.
And just to remind our audience that we will be taking quite a lot more questions from them towards the last 10 minutes of the webinar. So please do send them any questions you have in. I'll try to pack in as many as I can towards the last 10 minutes. In about 7 to 10 minutes time, we'll go into those questions much more thoroughly. But just to sort of stick with the theme of sort of the implications of the circular economy, we've talked about it a lot on sort of business financing. Now I'd like to just take the conversation to a slightly more speculative area, in the sense that it's even less well understood, of personal finance and sort of broader economics at that. So from what I can understand is, instead of paying for a load of assets, a load of products that you own, you're actually paying a smaller price for the access to its utility. But what would it mean if 70% of a person's income was sort of obligated to future credit in the sense of subscriptions or access to access over ownership? How would that sort of resonate in terms of what the finance companies have to provide? I don't know if Gerald, if you want to answer that.
Tough question. Well, my day-to-day job is looking at business finance, so not so much, or nothing at all actually, at personal finance. So it's really hard for me to understand. I know in conversations, if I may, Richard, I've heard you speak about what you always call the credit card society. So maybe you have some views on this.
Yeah, because well, one of the things which you can imagine is that if, let's say, of the spendable income, indeed, like 70% of a person's income is tied up into, obligations already in subscriptions. Of course, it depends. If it's Netflix, you can say, well, I can stop it tomorrow. But if it's really vital things in your life, and you're basically tied up in all these subscriptions, first of all, is it could become a credit card society, like like you could say, the US is, in which the robustness of someone's personal finance is clearly going down. People become much more fragile because instead of, they'll be less able to turn down or to slow down their spending if there's also less income, because they're tied up in just numerous subscriptions. The flip side of that is, as a bank, or as a, let's say, just as an SME company, and if I'm selling a service to a client, how do I know that this client is good for his money? Not only for just buying it, because I'm now selling him in, let's say, a 5-year subscription to a service. There will be banks or other parties who have to provide like credit assessments. But right now those small loans are not registered. So maybe there should be like a registration system or a credit assessment system, so that parties get insight in the credit worthiness of a person, also in a situation where you may end up with, let's say, 200 small subscriptions. But also, how do you manage those subscriptions? How do you keep oversight? Well, there will be parties that will provide the oversight for you, which of course, maybe like an app in which you can see what subscriptions you have, and maybe which ones you could actually let go of. So, and that on a more macro level, of course, if let's say an individual has 100 euros to spend this week, and instead of buying, say, one pair of jeans, he can take a subscription for 5 euros a month for their pair of jeans. He can spend the other 95 on all kinds of other products and services. So there will be a huge spending increase. But of course, it's a one-time effect, because next month there won't be 100 euro available, because 95 of it will be locked into existing subscriptions. So there can be all kinds of societal and economic effects if this takes off.
I see. But it could potentially help to boost consumption, but at the same time make us less secure, almost more fragile, by adopting that kind of culture.
Yeah, and the difference, of course, could be, let's say, for example, parties like H&M are already looking at, you're buying clothes there, but if you can also return them and get some money back from them, let's say after you've used it for 1 or 2 months, you get a completely different client loyalty, but you can also, the clothes that you are renting from H&M also have a residual value. So the better this return market will operate, the more robust people will be, because they can offload their subscriptions really quickly by returning the goods they're using, and and getting the value for it, or being able to get out of the subscription without a lot of value going down the drain. So it's hard to imagine where it could go, because the parallel that I'm seeing is, for example, I remember that in somewhere around 1989, I saw the first mobile phone, and it was like a small suitcase with an antenna on it. And at that time, people were thinking, it's great, it's a phone without a wire. But you could never imagine at that time what what a smartphone would be, or that we would use a couple of gigabytes of data per month on our mobile phone, that we would be watching football matches on our mobile phones, and all the big data that goes with it, and all the personalized service. You just can't imagine. And right now we're in the phase of this small suitcase with an antenna on it with circular economy. This is really the very first steps in what could be changing the economy dramatically.
I see. And I'm just going to take some of the questions from the audience. And one of the ones that we've had is around pushback and skepticism around sort of the idea of circular economy and circular finance. Can I just ask sort of an open question to the panel in terms of the response that they've had from some of their colleagues, in terms of their receptiveness to the concepts? Do they see the value of it pretty much straight away, what are the most common skeptical objections, if you like, to the concepts?
Well, one thing is like, this is just another hype, and it will, and it's just a marketing trick of selling more stuff to people. And the flip side of that as well. So apparently it goes about, it's about the economy. So, it may be perceived as like this is really a sustainability thing, but it's really sustainability very closely linked to the economy. So in my response as well, if you think it's just a way of selling more stuff to clients, well, then it's relevant.
Then it's working.
Yeah,
and,
it's the economy.
Yeah, and do you, with regard to sort of the association that you said with sustainability and it being a gimmick, so forth, do you think its association with sustainability is actually damaging to its perceptions as being a genuine and a real commercial opportunity? Just in terms of corporate culture, CSR and sustainability typically tend to be associated with one community of people that sometimes are a bit distinct from, I don't know, let's just say the typically sort of more commercial mainstream functions.
Yeah, I would say indeed that is, if you really want to perceive and understand the potential of what we've been discussing in the system change that this could lead to, then just focusing on the sustainability elements and the ecological and social impact of it will not get everybody on board. Will not enable everyone to understand it. The economic opportunities and then everything that we've been discussing now, that the efficiency, the cost cutting, the client relationship you can build, etc., all those elements immediately tap into the commercial, the business sense of at least most of the colleagues and the people that I've talked to, and in that sense it becomes a compelling business case for sustainability. That's how I like to see it. So it is a business case, and it has a lot of sustainable benefits to it, but it's on the first and foremost an economical driven concept.
No, very good.
I think also.
Yeah, sorry, please.
Yeah. No, I think also from this Gert-Jan, I think also the reaction from also what you hear, as I said, isn't it the same as the ESG criteria of sustainability of that we are already using, and isn't it part of the E of the environment of the ESG? But I think if you look at also the analysis that has been done, and as Gerald also rightfully says, it's also by lowering your biomaterial and increasing your margin, your EBITDA margins, it really generates could really generate more profits for the companies. So it's also definitely has an economic value apart from the sustainability side, and maybe it's also, as Gerald says, maybe it's a kind of a real business model for sustainable and circular investing. And I must say that also the analysis that we did on the companies that we also discussed with our portfolio managers, that they definitely also saw that definitely added value to the analysis, and you have different type of questions with your investee company than you do when you normally run through the financial statements.
I see. But if you are pitching, don't put too much emphasis on your sort of sustainability credentials, or these should be thought of as perks as opposed to the main thrust of why somebody should invest and engage with the company. It's just a solid commercial opportunity, as is sort of normally understood, not that it's the environmental benefits being the main reason.
Yeah, well, I think it's the combination, but in the end it generates the more stable cash flows and profitable companies. So a good investment or a good company to lend to.
And just taking some of the questions from the audience, I don't know to what extent our panel is engaged, I'm sure they are, with the discussion sort of in Brussels around the EU circular economy package. Do you know, we've had a question here, do you know of any expectations that will be placed on the financial sector as part of the package? Have they been included in the conversation?
I know.
I don't think so.
No, not that we know of.
I see.
Not that I know of, no.
Okay. Well, that's a missed opportunity, though, presumably.
Yeah.
And also, just to take another question, so that was a resounding no from what a panel could understand. Is circular economy just the first world sort of developed economy idea, or can sort of the developing world also take a slice of its growth potential?
I think especially the developing world, because especially low-income countries where loads of people cannot afford a product because it's just the investment is too high and the access to capital is much more difficult. To have something available as a service is much more attractive, and already there's much more experience already with that. And secondly, because labor is cheaper, just to rework products into new products is something which is in a way much closer to their current business model than in the first world. I mean, let's face it, if something is broken in an OECD country, you just throw it away. If something is broken in a third world country, it will be repaired and repaired and repaired until it really can't be repaired. So in a way, you could say circular economy is much closer to the way third world economies are working than first world economies.
Yeah, and if I can add to that, that's also what we discussed as well. We haven't touched upon it yet much how business can develop such circular models, but I think a lot of people understand that if you want to close loops on resources and products, you cannot do it on your own. You have to collaborate a lot with your suppliers, customers, and a lot of other parties in your supply chain. In other words, it's quite a change. It's even a systematic change, you could say. That is not too easy with invested interest already, or capital, or just interest in general. So in the first world, that might be a barrier to develop a lot of circular models. If you can have the opportunity to start from scratch or have less legacy in a developing market, then there's a lot more. You can go quicker and adopt it quicker than maybe in the first world they can.
And is there a realization that you have to, I mean, say from a financial perspective, that when you do invest or lend to a particular circular business, that you are also investing in an ecosystem and not just the individual company? I mean, does that complicate anything? Because as you just said, they can't do it alone.
It is more complicated. I mean, if you really think about value chain financing, that's really maybe the second phase of circular economy financing. And the first phase being like a lease or receivables financing, or the things which are pretty straightforward. But to finance a complete value chain, that's really more difficult, and parties are experimenting with that. But in a way, you could say if you overcome that hurdle, and you are financing a complete value chain, you have locked in your clients in a much stronger way than right now. So if you are able and willing to invest in that and you're successful, you're much more difficult to replace than in the current situation.
I see. And just looking at some of the other questions that we have also, are there any examples, this is coming from Tony Hill, are there any examples of circular business models in food and agriculture, sort of commodity enterprises beyond just small-scale organic farming, perhaps? How can agriculture get involved within this?
Well, I'm not the expert on this, but you do see, like, you could say, well, the natural value chain is a circular system by itself. Nature in itself is circular, so the agricultural production or value chain is really an interesting value chain to look at. But I wouldn't know any significant or large-scale examples there. You do see all kinds of investments in, like, let's say, bottom of the pyramid agricultural value chains, just because, like the cocoa and the coffee plantations. If we do not invest in them for the long term right now, there won't be enough coffee or chocolate 15 years from now. But I wouldn't really call them like circular business models. I wouldn't know.
Yeah, well, no, it's when you think about it, I mean, aside to also finance as well, it's one of the more difficult sectors to see how they can actually plug themselves into the circular economy. I don't know if we're just sort of naive of applications that have been found, but none in terms of when you try to apply the concept to agriculture and to food is really all that forthcoming. But
yeah, well, I think the difficulty with this industry is also, I think, that the, let's say, the quality of the product, let's say, decreases over time. I think with food and agriculture, that would be my first guess, and that's different than for instance in the building industry. So in that respect, I'm also not aware of too many circular models in the food industry.
But that's one of, yeah, please.
The only thing you do see, I think it's, but that's also not large scale, is that indeed also here waste products or waste streams from agriculture or horticulture or stuff is used for other sectors, for instance in the ping sector, stuff like that. But that's like but all that too, that's also like the same with Gert-Jan said, that's not possible on a large scale, because that then the price would become too high if you start to transport it, or you lose the quality of it. So I guess there has to always be more local developments.
Yeah, I guess it's more like the smart use of residuals. For example, I know of Heineken, the beer brewer. Their input and they use the waste products that the part of the grains and stuff that they can't use. They feed it again back into their own supply chain, and they harvest biogas from waste flows and those kind of things. But it's more like smart smart reuse of waste streams. So extracting additional value from stuff you otherwise throw away.
I see. And I'm going to have to stop the discussion there for lack of time remaining. Thank you to all our panel, first of all, for taking the time, and also for the audience for listening. If you're interested in circular business, I'm running also another webinar on developing circular strategy, how to make one and why you should bother, I've named it. That's with Accenture Strategy, Philips, AkzoNobel and Veolia, and that's on the 7th of May. So the UK audience may not be all that keen to engage because we have a general election at that time, but it's free to sign up, and also you'll receive recordings of that webinar as well if you want to get involved. You will receive an email about it tomorrow. And once again, if you would like to understand how to create a circular business and the case for doing so, how it can essentially help your company make more money, and try to conceptualize exactly what the application of these principles and this concept is to your own particular model, then join us in June in London for the Circular Advantage Business Forum. Feel free to email me with questions and comments at boris.petrovic@innovationforum.co.uk. But until next time, I hope you've enjoyed the webinar, and thank you for tuning in.